The spring season is turning out to be one of optimism for Japanese equities. After decades of lackluster performance, Japan's stock market is back in favour, with the big nod from billionaire investor Warren Buffett highlighting the benefits of buying on the cheap.
We're actually bullish right now for Japan equities, but Japan trades on 12 times forward earnings. Its longer term average is 14 times. And so if you look at the valuations compared to history, that is very, very compelling at these valuations.
Japan's Nikkei 225 is up nearly 10% year to date, as the weaker yen drives better returns for investors. Still, it's a long way off the highs in the 1990s, when the index hovered closer to the 39,000 level.
If you look at the last 20 years of returns in US dollars, the Nikkei, I think, averaged around 5 to 6% annualized, while you're getting around 8 to 9% for the S&P 500. So just in terms of the kind of returns, it's just been a lot less attractive, hence a lot less attention paid to that equity space.
The cyclical nature of Japanese equities and the country's aging population and perceptions of low returns have turned off many foreign investors. But that could change.
We actually think it's a pretty decent entry point for Japan. Japan is the third largest economy in the world. It's got a $5 trillion GDP. It's the second largest, capitalist democratic manufacturing country in the world. It's a very stable political country, very, very firm rule of law. Geopolitically, Japan's role in the world has changed, and that will play out in the equities world. That will play out in favor of equities investors over the next 10 years.
If you look at the structural situation, is that Japan is now going out of a decades of deflationary era. We see investment opportunities in domestic companies that benefit from the structural changes in Japan. For example, the digital shift to healthcare sectors and also solution provider to labor shortage. And in addition, global manufacturers are growing in such areas as factory automation and niche technology.
One way to get started on Japanese equities is to replicate Buffett's strategic bets on 5 trading houses, but you buy the shares in small amounts. Another way to play Japanese equities is via the exchange-traded fund route.
With anyone probably with less than $100,000 to invest, that might be your entry point to start looking at Japan. I think with $100,000 or more, maybe even $50,000 or more, you could also look at specific funds. There are long-only Japan funds by the large, obvious name financial services houses. There are hedge funds, equity long-short hedge funds. There are even venture capital and private equity vehicles.
You can open an online brokerage account with companies like Saxo or Interactive Brokers, and even our local brokers, OCBC Securities, DBS Vickers, UOB Kay Hian. They can all access Japanese equities. They charge anywhere between 15 basis points, which is 0.15%, to maybe 30 basis points, 0.3% for the trades. Apart from that, you would have to bear some FX transaction costs because the stocks are obviously in Japanese yen. One good way to be successful from capturing the returns at Japanese equities would be to just hold it as part of a diversified portfolio. And what you do is that you buy a very diversified fund or index that tracks all sorts of stocks in different countries, typically weighted by market cap. So in that case, Japan would make up about maybe 6 to 8% of your portfolio.
While the potential uptick in Japanese equities could look attractive, there are risks that foreign investors need to keep in mind.
Trying to time that entry point is very difficult. And so we do think there is the old adage of time in the market rather than time in the market for Japan, because it is more cyclical.
99% of the business here goes on in Japanese, not in English. And these create barriers to, they create an information arbitrage, I guess is one of the ways we like to refer to it. So it's very easy to get it wrong. You really need to do due diligence on that business, or you need to hire somebody who knows how to help you do that. So these are some of the barriers to entry, if you will, to your average investor, retail investor who is looking at Japan.